Warren, good to have you on. We hear you've been giving the market the benefit of the doubt for some time. It's been the right way to approach it right here. How does the thing set up right now in terms of what the market has already been feeding off of, and where do you think it goes from here?
Yeah, I mean, we're still overweight equities. That's been our posture since early May. We stepped out and we neutralized our overweight back in February and kind of got back in early May. And I think you want to let that run. I mean, July seasonality, just to keep early simple, is so positive. I mean, I think a lot of people know this, but one of the things that we looked at is sort of counterintuitively, when you have this strong May and June, it feels like maybe July shouldn't be that positive. But in fact, when you have a greater than 5% gain in May and June, you're leading into July's even better. And so that first half of July, when you break the year up into 24 different two components for each month, this is probably one of the strongest little 2-week periods for the market. And so want to stay long, at least for right now, overweight equities.
I hear the seasonal tailwind story. I certainly hear the investors are maybe still underpositioned, or they haven't participated fully and might have to be net buyers or would be slow to sell if we did keep going up. But all of that kind of boils down to somebody else out there is going to buy it from me at this valuation. What is the underlying kind of fundamental, the earnings trajectory and the other things say about where we should be?
Yeah, I think that the rate of the rally is probably going to slow as we get through this July period. I think that one of the reasons why July is seasonally so strong is because you do have a lot of new money coming in, rebalancing flows and other flows. I still think there's some room to squeeze out of that systematic bid that we talked so much about over these months that got forced to de-risk during the vol event in April, and they're getting back in. And then the other big driver of the market's going to be earnings. Like you suggest, I think earnings estimates have come down probably more than is necessary due to the tariff fear. And so I think that's created a lower bar for these companies to jump over as we go through the second half of the year. And the other big factor we see with the big, beautiful bill is that we're going to still be running these 6 to 7% deficits probably out for the next few years. And I mean, that's pure money creation into the economy. That's 6 to 7% money creation, unfunded money creation into the economy. And I think that's been really the backbone of the economy and the backbone of the market. And it's why we haven't had a lot of credit creation, see home builders and housing markets struggling. But still, you have this one big factor, fiscal stimulus that's working.